Hello everyone and happy Friday. Before we share my analysis from these last few days, please remember that neither I nor the SIMETRI team from Crypto Briefing are licensed financial advisors. What we provide is not a personalized investment advice. It is merely our opinions based on our various research and diligence. As always, do your own research before making any decisions about buying or selling crypto.
Okay, so let's break down the technical update. So 57,000, it's been a key level that I've been indicating over the last couple of weeks, and we spiked down to there over the last few days, and then we saw a massive pushback. So that just tells me even more confirmation that that is a very, very important level in the market. We've got new monthly and weekly pivot points. So the new weekly pivot point is 61.1. We probably need to get underneath there to get the bear party started today. And the monthly pivot, I do favor that being tested again. So 57.3 is a monthly pivot. So that could be the first spot to look for a long if we don't sell off too heavily today. But if we get underneath there, then it's time to look a lot lower. Key resistance levels 63.6 and 64.9. I believe if Bitcoin looks rock solid above 64.9, then we're probably looking at 73,000, something like that at the moment. And obviously past there, 80,000, I think is really the two key targets I've got there. So daily closes below 57. That will give a sell signal, but you've got to be careful there because we could easily spike down, move underneath there, and then close a daily candle back above there. But that sort of region we're going to look at. And with that said, we're going to have a deeper look at Bitcoin on the charts now. So let's get to Bitcoin. So if we have a look at what's been going on over the last couple of weeks, we looked at a potential move to the 67,000 area, and we got that move up from there as predicted. And then we were looking for a pullback, and the market has pretty much held 57,000. I've been noting that 57,000 is an important level in the market, and we've subsequently had a pushback. So since we've broken above this yellow trend line, it's basically been a one-way journey. So as we head moments away from the FOMC, it's now a key decision. Does the market head close to that trend line? Do we continue higher? And are we going to get the big dip buying opportunity before Christmas at the market? And a lot of traders are hopefully been looking for up around the 53,000 area. So here we had a false signal yesterday. Or so far it's looking false in that a parabolic SAR indicator gave its first buy signal in some time. So we really have to see what happens around the FOMC meeting, but so far it's not looking that great. And again, you'll see that a sell signal will be issued if we move under 57,000 as highlighted by the parabolic SAR indicator. So if we move underneath there, it's time to have a look at reasons why we could go lower. So I guess as I've been highlighting over the last few weeks, we do have some negative price divergence built up. So firstly, the recovery from 57,000 over the last few days, we've got some negative signal line divergence. So that's another reason why the market may come down and test 57,000. Whether that's as low as it gets, we don't know yet. We'll have to see how the market reacts to the FOMC meeting. And again, we've got these heavy layers of negative histogram divergence with price has been going in the opposite way. So for me, the opportunity cost of going long at 57,000, I think it is a great opportunity, but I guess it comes down to stock placement and just how aggressive you are in your trading. Waiting for a deeper correction towards the 53,000 level may be the play because then basically you don't need as wide a stop loss. So potentially at the moment, we're just going to have to monitor the price action for what happens there. And I guess another reason why we could see this come off is this head and shoulders pattern that has been unfolding. And one of the big reasons, as well as the Australian news this week, that we didn't get a break lower. So this kind of symmetrical pattern here. So potentially it was supposed to break down there, and it didn't. If we follow the symmetry of the shoulders, and again we've just been consolidating, and we've moved back upward again. We've reversed back lower, but I strongly believe if we move back under 57,000, then there's a good chance that this lower time frame negative price divergence will be unwound. So let's do a brief summary of what we're looking for. after the FOMC. So we are definitely hoping for a move down towards the 53,000 to 51,000 area and a big reversal from there. So that would be a great Christmas present. And hopefully from there, we could see the market take off towards maybe 73,000, maybe 80,000. So the opportunity cost is significant for not attempting longs around 53,000, in my opinion, and based on the analysis today. 57,000, it may be a touch risky, given that if it breaks, we could see some significant selling. And also the divergence that we looked at earlier on the crypto total market cap chart. And I guess what's giving me hope is negative technical divergence on the lower time frames. So hopeful for a correction. And obviously, we have to be fair and we have to look at both sides of the coin here, in that a sustained move above the 64,000 level today on a multi-day basis, and then moving towards the former all-time high around 64.9. And I think there's little chance of a price drop off. But again, it's very much dependent on what happens around the FOMC meeting and tapering today. Okay, so let's take a look at Ethereum. So over the last few weeks, we've been looking at this wedge breakout. It's been very, very important. We did come down to test it a few days ago, and that held pretty much rock solid, and we've been moving higher. So all the time we're above the wedge. Ethereum is dangerously, dangerously bullish, but there is some hope, a bit like Bitcoin, that we could see a pullback at some point. So if we have a look here, we can see this head and shoulders pattern is basically been invalidated, and it does look like we're heading higher. I guess the target of this invalidated pattern is close to around 5,000 US dollars, which makes Ethereum an extremely dangerous sell at the moment. We do have this important trend line here that may need to be come down and tested. It's potentially much too deep. I think we need to look at more evidence of why a retracement might occur in Ethereum at some point. So we do have OBV and we do have MACD negative price divergence, and this is extending down to some very, very interesting areas. So around about the 3.5 to 3.6 region for both forms of divergence. So that is definitely a reason why we could get a move. And this trend line here, so this was a former breakout trend line here. Haven't fully tested it, so maybe we'll come back down and test there. But for me, a potential reversal from 5,000 is an idea. And also if the market comes off hard after the FOMC meeting, that's also another reason that this may be a good place for Ethereum to head to and get filled. And I think possibly one of the more interesting charts that I've found recently is this massive head and shoulders pattern here. So this has just been invalidated. So the fact that this has been invalidated strongly suggests that Ethereum is going to head higher, and that we should measure the size from top to bottom of this pattern. And this is indicating a move towards around 7,000 US dollars. So we're very, very dangerously bullish. Why we trade above the head of the pattern, but of course we could come back down and test a bit lower. And I think anything towards 3.6 in that area is a significant buying opportunity. And I guess based on the fact that we've invalidated this pattern after such a long time, then that is very, very bullish for Ethereum. And that's why I'm giving a target of 7,000. I would say 7,000 US dollars. And something we also have to consider is that if we move back towards 3,500, then if we multiply 3,500 by 2, that gives us 7,000 US dollars. So that would be 100% gain from the expected pullback area. So that's also very interesting, and that's another reason why we could get a pullback, because we could have some sideline whales pull this one lower one time for one final pullback and a nice big gain into Christmas.
And thank you. I hope you found my thoughts helpful. If you'd like more, please click the subscribe button for Pro BTC Trader and join me every week on Wednesdays for our live trading war room and daily email updates.